Building a winning dividend ETF portfolio. Strategies for consistent income. In today's turbulent financial landscape, generating consistent income streams alongside capital appreciation has become a paramount concern for savvy investors. Dividend ETFs, exchange-traded funds, emerge as powerful tools in this arena, offering instant diversification, professional management, and regular payouts from a basket of income-generating assets. But constructing a winning dividend ETF portfolio requires careful consideration, navigating a multifaceted landscape of investment objectives, risk tolerance, and market dynamics. This article delves deep into the intricacies of dividend ETF investing, empowering you with the knowledge and strategies to build a portfolio that delivers sustainable income while optimizing capital growth potential. Understanding dividend ETFs. Before diving into portfolio construction, it's crucial to understand the key characteristics of dividend ETFs. These passively managed funds track specific indices composed of companies with a history of dividend payments. They offer several advantages over individual dividend stock selection. 1. Diversification. Owning an ETF instantly grants exposure to a diversified basket of dividend-paying companies, mitigating single-stock risk. 2. Liquidity. ETFs trade on exchanges like regular stocks, providing immediate buying and selling opportunities. 3. Low costs. Compared to actively managed funds, ETFs typically possess lower expense ratios, minimizing fees that eat into your returns. 4. Transparency. The underlying holdings of an ETF are readily available, allowing for clear insight into your portfolio's composition. Defining your investment objectives. Building a successful dividend ETF portfolio hinges on a clear understanding of your investment goals. Are you seeking immediate income to supplement your lifestyle? Aiming for long-term wealth accumulation through dividend reinvestment? Your objectives will dictate the dividend yield, growth potential, and risk profile of your chosen ETFs. 1. Income-focused investors. Prioritize high-yielding ETFs, focusing on industries like utilities, real estate, and consumer staples known for consistent payouts. However, be mindful of sacrificing growth potential for immediate income. 2. Growth-focused investors. Seek ETFs that balance a decent dividend yield with exposure to companies with strong growth prospects. This allows you to benefit from current income while benefiting from potential future capital appreciation. 3. Total return investors. Aim for a balanced approach, incorporating both high-yielding and growth-oriented ETFs to maximize total return, combining current income with long-term capital appreciation. Building your dividend ETF portfolio. Once you've grasped your investment objectives and risk tolerance, you can embark on building your ideal dividend ETF portfolio. Here are some key strategies to consider. 1. Diversification. Don't put all your eggs in one basket. Spread your investments across various ETFs with different investment focuses, geographic regions, and asset classes. This mitigates risk and ensures exposure to diverse income streams. 2. Dividend yield versus growth potential. Strike a balance between immediate income and long-term capital appreciation. Consider high-yielding ETFs for current income needs, while incorporating growth-oriented ones for future wealth accumulation. 3. Expense ratios. Minimize unnecessary fees by opting for ETFs with low expense ratios. These fees directly impact your returns, so even a seemingly small difference can significantly impact your portfolio's performance over time. 4. Reinvestment strategies. Reinvesting your dividends can significantly compound your returns over time. Consider automatic reinvestment plans to maximize the power of compounding and accelerate your wealth accumulation. 5. Regularly monitor and rebalance. Markets don't stay static. Periodically review your portfolio's performance, rebalance as needed to maintain your desired asset allocation, and consider adding or removing ETFs to adapt to changing market conditions and your evolving investment objectives. Beyond traditional dividend ETFs. The universe of dividend-focused ETFs extends beyond traditional broad market or sector-specific options. Several innovative strategies can cater to more nuanced investment goals. 1. Dividend Aristocrats ETFs. Invest in companies with a track record of consistently increasing their dividends over time, providing a reliable income stream with potential for capital appreciation. Examples include DVY, SPDR Dow Jones Dividend Aristocrats ETF, and NOBL, ProShares Russell 1000 Dividend Aristocrats ETF. 2. Covered call ETFs. Generate additional income by selling call options on the underlying portfolio holdings. This strategy can lower potential capital gains, but also adds a layer of income alongside regular dividends. Examples include QLQR, Invesco QQQ Trust Covered Call ETF, and PXQ, PowerShares QQQ Covered Call ETF. 3. Low volatility dividend ETFs. Prioritize stability by focusing on companies with lower beta coefficients, indicating less significant price fluctuations compared to the broader market. This provides a smoother income stream, albeit with potentially lower overall returns. Examples include USMV, iShares MSCI USA Minimum Volatility ETF, and SPLV, SP500 Low Volatility Dividend Achievers ETF. 4. International dividend ETFs. Diversify your income streams beyond domestic markets by investing in ETFs focused on high-yielding companies in developed or emerging economies. This can offer exposure to different economic cycles and potentially higher dividend yields, but also comes with additional foreign currency risk. Examples include HDV, Horizons Dividend Value ETF, and IHDV, iShares International High Dividend ETF. 5. Themed dividend ETFs. Cater to specific interests or ethical considerations by investing in ETFs focused on dividend-paying companies within specific sectors or themes, such as clean energy, healthcare, or technology. This provides targeted exposure to sectors with promising growth potential while enjoying regular dividend income. Examples include TAN, Invesco Solar ETF, and IHDG, iShares Global Clean Energy ETF. Factors to consider when choosing dividend ETFs. 1. Dividend reinvestment plans. Some ETFs offer DRIPs, which automatically reinvest your dividends back into the ETF, enhancing the power of compounding and accelerating wealth accumulation. 2. Tax implications. Dividend income is generally taxed at lower rates than capital gains, making dividend ETFs a tax-efficient way to generate income. However, Consult with a tax advisor to understand the specific tax implications for your individual circumstances. 3. Market volatility. During periods of market downturn, even high-yielding ETFs can experience dividend cuts or suspensions. Be prepared for potential fluctuations in income and ensure your portfolio aligns with your overall risk tolerance. Building and maintaining your dividend ETF portfolio. Once you've selected the ETFs that align with your objectives and risk tolerance, it's time to build and maintain your portfolio. Here are some additional tips. 1. Start small. Begin with a smaller investment and gradually add to your portfolio over time, allowing you to adjust your strategy and holdings based on market performance and experience. 2. Review and rebalance regularly. Don't set and forget. Regularly review your portfolio's performance, rebalance as needed to maintain your desired asset allocation, and consider swapping out underperforming ETFs, or adjusting your strategy based on changing market conditions and your evolving investment goals. 3. Seek professional advice. If you're new to investing or require comprehensive financial planning, consider consulting with a registered financial advisor. They can help tailor your dividend ETF portfolio to your specific needs and risk tolerance, providing personalized guidance for achieving your financial goals. Conclusion. Building a winning dividend ETF portfolio requires careful planning, strategic selection, and ongoing monitoring. By understanding your investment objectives, assessing your risk tolerance, and adopting a diversified approach, you can tap into the power of dividend ETFs to generate consistent income, achieve long-term capital appreciation, and navigate the ever-evolving financial landscape with confidence. Remember, investing involves risk, and past performance is not indicative of future results. Conduct thorough research, consider your individual circumstances, and seek professional advice when necessary to make informed investment decisions and build a sustainable dividend ETF portfolio that meets your specific needs and aspirations.